18 months ago, I had a consult call, and these have been extremely valuable, Andy. I've done about 830 now in 5+ years, and they're boots on the ground. 1 in 10 is very valuable. The other 9 they're just good people, a lot of questions, and they're trying to learn. But this guy said, Jim, I was involved with some accounting, and every single big bank is loaded with gold, ready for the next chapter. Every single big bank. I said, beyond Wall Street and the big five? And he said, oh yeah, but they don't have as much. The big five have enormous amounts of gold. They're not going to go under for lack of gold. And he said, don't mention this, don't mention that, don't mention this, because they'll probably figure out who I was and do me harm or cut me out of contracts. Andy, there's a lot going on, and gold is the future.
Over the past 5 years, central banks have significantly increased their appetite for gold, collectively purchasing nearly 1 out of every 8 ounces mined globally. This surge in official sector demand has far exceeded the inflows into gold-backed ETF products by more than 5 times, highlighting a clear institutional preference for physical bullion over paper representations of the metal. The trend highlights gold's enduring role as a strategic reserve asset, particularly in an environment marked by geopolitical and financial uncertainty. As of early 2025, official data places the United States firmly at the top of global gold holdings, with reserves totaling 8,133.5 tons. When distributed across its population of nearly 340 million, this equates to roughly 23.9 grams of gold per person, worth nearly $2,200 at current market prices. This substantial stockpile is not merely symbolic. It represents deep-rooted confidence in gold's role within the financial system, especially as systemic risks begin to surface more visibly. JimWillie, publisher of The Golden Jackass, states that major U.S. banks are quietly stockpiling gold in anticipation of a significant shift in the global financial system. He warns that this move signals a coming transition to a gold-based framework, raising concerns about how current credit systems, including digital wallets and credit cards, might be impacted or even replaced. In a significant policy move reflecting this broader sentiment, Florida has become the first major U.S. state to recognize gold and silver as legal tender officially. Governor Ron DeSantis signed CS House Bill 999 into law, allowing precious metals to be used for everyday transactions through money service businesses such as PayPal and check cashers. During a press conference in Apopka, DeSantis emphasized the bill's aim to provide Floridians with a viable alternative to the U.S. dollar, one less susceptible to the risks of inflation and federal monetary manipulation. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
It was about 5 months ago, a client of mine said, Jim, I've got a middle to high-ranked military research contact, like scientific research. And he's very connected, and he has permission to, it's not a leak. It's more like an intel drop. That's what they call it, an intel drop. And I've been getting it now for 5-6 months. And I'm telling you, they're deep. They're not 5 lines. They're 400 lines. There's a lot of information, and some of it is scientific, and I don't want to get lost in the Malaysian airline. I want to get focused on some things that are really relevant right now. He claims that the white military alliance, you call it whatever you want. I call it Team Trump, the white hats. It's not just the United States, by the way. Trump is part of an organization that's far more than just the United States. He claims that Team Trump, with their confiscations and victories, mostly in the Pacific Rim, with gold wars, Team Trump has accumulated well over 100,000 tons of gold, and maybe as much as 300,000 tons of gold. And 100,000 tons of gold is, I believe that's 10 trillion. So the 300,000 would be 300 trillion. Now, he did not say how it was going to be used. He didn't say it was going to cover treasury bonds. Another thing he said in the related item is that Trump is going to saddle the cabal with the $34 trillion in debt. It's not going to be loaded on the U.S. households. It's not going to be draining gold that is an extension of Fort Knox, which got recovered. So Trump has got well over 10, maybe 20 times more than Fort Knox. That's just one item. Another military drop. This is a while back. Russia hid 120,000 tons of gold during the entire Soviet era. And they hid it in the Orthodox Church behind false walls and double basements. 120,000 tons of gold. So the Russians are ready. Chinese, they're battling with the Asian elder families, and I'd rather not get caught up in that. He said that the White Alliance with Trump is in command of the next generation high-tech tools, devices. And I could blow you away with a couple things, but I'll just do one because it's a little funny. Here's one. And this came from the same guy. Last July, he said, Jim, I got some news for you. This is through the contact. Got some news for you. Trump won next November. Now just put those tenses together, okay? Trump won next November. So when clients asked me in July, August, September, and October, I said, Trump won. He already won. So don't worry about it. He won in November. What? Okay. It's a head scratcher, and it's a time travel bit of evidence from numerous. Okay. Here's one that's very recent. We've been told that there were 750 plane loads from the Vatican. No, it was a lot more than that. They got 40,000 tons out of the Vatican, and they're still pulling the gold out. There's an unspeakable amount of gold in the Vatican. I think it's connected to those, the tunnel, Istanbul, Jerusalem. Okay, it's very murky, that story, but you keep hearing 100 miles of chest-high gold. I mean, it's unfathomable. It's like 1 million tons. And let me finish this little soliloquy. I don't know. I get carried away, Andy. I can go on and on, but I just heard from the same guy last week. Bank of America has 1 foot in the bankruptcy receivership now. 1 foot in. I asked, give me detail as much as you got. A different military source, but it's been very reliable too. I got 2 really nice big military resources. Itchy ear, sorry. He said the word used was receivership. I said, okay, so trustee, U.S. government trustee, FDIC. And he said, didn't say FDIC. I said, what is it? He said, some kind of trustee, but it's receivership. I said, okay. Was there like a tripwire? Was there an event like with money laundering that got wrecked? Bank of America, money laundering, Bush narco bank, can't avoid that. And he said, I don't know, but that's very likely. I'll try to find out. Okay, Andy, there's a lot going on. And a lot of it has to do with gold. Some of it has to do with the big banks and how they're realigning. I honestly think that London got drained and the big U.S. banks are loading up, and you probably have a lot more information on that. Looks like it with the nod. They're loading up for the gold foundation. And I got to say something else. 18 months ago, I had a consult call, and these have been extremely valuable, Andy. I've done about 830 now in 5+ years. And they're boots on the ground. 1 in 10 is very valuable. The other 9 they're just good people, a lot of questions, and they're trying to learn. But this guy said, Jim, I was involved with some accounting, and every single big bank is loaded with gold ready for the next chapter. Every single big bank. I said, beyond Wall Street and the big 5? And he said, oh, yeah, but they don't have as much. The big 5 have enormous amounts of gold. They're not going to go under for lack of gold. And he said, don't mention this, don't mention that, don't mention this, because they'll probably figure out who I was and do me harm or cut me out of contracts. So, Andy, there's a lot going on, and gold is the future.
JimWillie has long criticized the normalization of financial crime within the U.S. banking system, pointing to J.P. Morgan Chase as a prime example. According to Willie, the bank's extensive history of regulatory violations and the billions it has paid in fines illustrates how large-scale fraud is increasingly treated as just another cost of doing business. That assessment was underscored yet again when two U.S. banking regulators fined J.P. Morgan Chase and Corporation $348.2 million over failures in its market surveillance systems. The Federal Reserve, along with the Office of the Comptroller of the Currency, cited the bank's inability to monitor trading activities across its firm and client operations adequately. The misconduct spanned nearly a decade, from 2014 to 2023, and involved lapses in tracking billions of trades across at least 30 global trading venues. This is not an isolated incident. Back in February, J.P. Morgan preemptively disclosed it expected to pay around $350 million in civil penalties related to incomplete reporting of trading data to surveillance platforms. At the time, the bank also acknowledged it was in advanced negotiations with a third, unnamed regulatory body, an admission suggesting that more penalties could still be forthcoming. This latest penalty is part of a broader pattern. In 2021, J.P. Morgan agreed to pay $200 million to settle civil charges over record-keeping failures, a move that set a precedent for similar cases across Wall Street. Together, these penalties speak to systemic weaknesses in oversight and compliance within the financial sector's most powerful institutions. While such fines are significant in absolute terms, they represent a fraction of J.P. Morgan's annual earnings and do little to change the bank's operating behavior. Willie and other critics argue that until executives face personal consequences or systemic reforms are enacted, financial giants will continue to treat regulatory infractions as minor setbacks rather than serious violations of public trust. Let's get back to the interview.
I think maybe a quarter of the S&P 500 companies. I didn't mention something that also came out in the Intel drop. I'll just say it because it's so important. I can't really say, well, I'm going to save that for the May newsletter in 3 weeks. And no, it's just too important. A quarter of the S&P 500 companies are at risk. And my military guy said it's a combination of criminal finance and insolvency. So, okay, it's not just big banks. So it's going to be like big corporation, multinational corporations. They're in trouble. And he said, well, hold on to your hat. He was told by the military ranking guide, he said, Jim, I'm talking to majors and colonels, and they're in meetings with generals, and they've got permission to talk to me. And I said, this is great. Tell me all you can. He said, there might be a quarter. It's at most a quarter of the S&P companies, S&P 500. So, do your napkin math. You get 125 corporations. That's for the people who are math challenged out there. And there are a lot of them out there, and it's really quite disgusting. He said they're going to be assigned new CEOs and boards. I said, that's divestiture. He said, sounds like it. I don't know what else it would be, Jim. And I said, I don't either, if they're going to be assigned a new board of directors and CEO. So, okay, you asked, and the focus is really on the banks. And I have a really important point that I'd like to make. And we've got to learn from history. I know it sounds like so long ago, but for me, it wasn't. It was the Lehman crisis. It was 2008. And I gave a 1-year warning, Andy, 1 year in advance. I said, Lehman's going to fall. The credit default swap is zooming up. It's almost 1%. Normal is 15 basis points. Okay. The lesson I learned, and that was 17 years ago, was Goldman Sachs and JP Morgan had each more than double the exposure of Lehman in mortgage finance. Just cockeyed, crappy, quality credit default. Credit, what do you call it? Credit obligations, CDOs, I can't remember. They just make up names and this is very, very sophisticated. Yeah, CDOs, credit something obligations. And it was loaded with trash. It was like, Class B debt, and they called it AAA, and no one really checked. Okay, here's the lesson learned. Goldman Sachs and JP Morgan had more than double the exposure of Lehman. So they decided to kill Lehman. It was odd man out. They're always looking for odd man out. And in 2003, Bear Stearns was odd man out. They were long gold, short dollar. They had to be killed. It took a long time to resolve their book of long gold. They had, oh my gosh. Okay, so And that was previewed a couple months in advance, but not by me. That was a learning process for me. And from that, oh my gosh, what's next? And it was Lehman. And I had some good tips from clients. I know colleagues on the credit default swap. Here's how it applies to now. Bank of America is involved. I got to say something. I'm not going to be talking about child-related crimes anymore. I've had my life very close to totally destroyed from dark occult forces. And if you don't buy it, I don't care if you don't buy the argument. It means you don't know shit about it. I will talk about money laundering because it's finance. My theory is this, Andy. Bank of America is going to be singled out as the narco bank with money laundering. They're going to be implicated. They're going to be wrecked. They're going to be put through trustee bankruptcy receivership when all the banks are just as involved. But Bank of America has the Bush moniker. JP Morgan, Citibank, Goldman Sachs, the others, they don't. And I believe I have a different source. It's a very different type. I don't want to describe it, but the person said Wells Fargo has resolved its problems at the board level. And that was done over a year ago. So I don't expect Wells Fargo is going to get picked on.
Recent legislative moves, such as Florida's recognition of gold and silver as legal tender, highlight a push for alternatives to traditional fiat currency in everyday commerce. However, this backdrop of increasing institutional gold demand contrasts sharply with ongoing challenges in financial oversight, as evidenced by repeated regulatory penalties against major banking institutions. These fines, while sizable, reveal persistent gaps in market supervision and raise questions about the effectiveness of current enforcement measures in curbing systemic risks. Could the growing appeal of gold as a financial safe haven, alongside mounting concerns over banking regulation, signal a fundamental shift in how value and trust are maintained within the global economic system? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.